One of the stocks on our radar is Patanjali Foods. Remember, FMCG stocks yesterday were under pressure. They felt the demand slowdown as worrying commentary came in from Godrej Consumer, dragged the other FMCG stocks lower as well. The key point from Godrej Consumer's mid-quarter update that may impact all the other FMCG companies is that 20 to 30% rise that they've seen in palm oil prices. The reason why that's important is because it's an important input for a lot of the personal care products like soaps, etc., and also a lot of the food products too. Sanjeev Asthana, who's the CEO of Patanjali Foods, joins us now. Sanjeev, good morning. Good to see you in. A large part of your revenue, of course, comes in from oil, but increasingly you've, seen a higher proportion coming in from non-oil business, FMCG, and more so post the, acquisition of the home and personal care brands from the parent Patanjali itself. On higher palm oil prices, can you tell us what's the kind of impact that your soaps portfolio has seen in the third quarter so far, and also your other food portfolio, which does use palm oil as raw material?
So high palm oil prices, clearly have a big impact. There's no question about it. So whether it's the soap prices, as we've seen that company after company have taken a price increase. Likewise, palm is a big sort of cost item in the manufacturing of biscuits and confectionery. So it always has an impact. And I think certainly it puts a lot of pressure both on the bottom line as well as the managing of the cost, of palm oil and the other ingredients. That becomes critical. So overall, net, I see that there will be some impact, not that substantial in terms of our own overall portfolio, because it constitutes a critical part of it. But I think it will have some impact, certainly, on the cost of inputs going into the manufacturing of these products.
Could you give us a number? What proportion of your revenue is exposed to palm oil as an input, and how much has your input cost increased by in that portfolio?
So palm has got two dimensions for us. One is that we're the largest sellers of palm oil in the country in our edible oil portfolio itself. So that is some impact in terms of the the demand elasticity on the price elasticity. But in terms of what it goes into the biscuits and the soaps, overall basis. So their contribution is about 20% in case of biscuits, and it's about 20% plus in case of the soaps business. So net on an aggregate basis, it would have an impact of close to about 1,000 crores of palm oil gets used into various businesses for us.
Okay, 1,000 crore of palm oil gets used into various parts of your business. The prices have increased by about 20 to 30%. So 200 to 300 crore has been your overall year-on-year cost increase. But you also said that the offsetting factor of that would be your own palm oil business that you sell through in your edible oil. So what could the benefit out there be? Because, this edible oil cycle has been in your favor. Last quarter, you did a revenue of, volume growth of 4.6% with an EBIT of close to 200 crores. You had guided for an EBIT run rate of around 250 odd crores. Do you think that can increase? What's a sustainable number here and volumes?
So just to clarify that part of 200 crores, most of it is a pass-through basis. So It doesn't have an impact directly into a bottom line, only it has a partial impact. And the second part is that in the edible oil, entirely 100% of the price increase typically tends to get passed on to the consumers, and it gets priced in. So it's normally very beneficial for us. If we see the second quarter results and the third quarter, the bump in the prices will actually be beneficial because most of it is, on a pass-through basis, and the value in case you're holding on to the inventory, typically it's a value addition in terms of the P&L, in terms of the business, etc. So this rise in prices for the edible oils is positive. It is less positive in case of the ingredients that we have, but the impact is not fully passed on to the consumer. So there's only a partial impact that we see in the P&L.
All right. Hi, Mr. Asthana. Good morning and good to see you. Ben, let's talk about, the integration of Patanjali's HPC business into your own. How has the scaling up been, and what are the targets you have before you?
So very early days. We're just still 2 months into the integration now. 1st of November, we integrated that. It's going on well. Right now, we're just going through the process of integrating, the various elements of terms of teams and distribution, etc. By end of December, we are reasonably confident that it will be fully done and sorted out. So next quarter will be sort of positive, in terms of the overall on a fullness of, scale as it is being planned. And in the first 2 months, it has been pretty much on its course. November was pretty good for us. And December, we're hoping that will also be positive. And I think on a fully matured and fully integrated basis, I think 1st of January, we will start on a full steam.
FY26, what could it do? I think you were looking at a number of around 1,500 crores for the year. So FY26, what should the rough revenue number look like?
So on the HPC business alone, we said that we projected 15% growth rate. So typically, we're expecting about 3,200 crores of revenue in FY26 for the HPC business.
Got it. All right. And also give us a sense of festive demand, Mr. Asthana, for the verticals that you function in, oil as well as FMCG business. How has festive season been? And also your sense with regard to rural as well as urban demand.
So there are two sides to it. Festive season was good, but slightly muted. And in terms of the urban demand, clearly there are challenges. We're seeing some bit of contraction there. The growth rate has been, rather slow. And rural demand is still, while remains positive, but we'll have to see next couple of quarters that how it goes. But overall, slight dip in the FMCG growth rates. We still are maintaining the food business. We'll maintain between 9 to 10% growth. And in the HPC business, we see a lot larger opportunity of 15% growth. So we're pretty much holding on to that projection for us.
So first half of this year, your revenues are at around 15,400 crores, EBITDA at 855 crores with a net profit of 572 crores. Give and take everything, what is the second half of this year looking like? And if you could give us overall projections for FY26 as well.
So certainly better than the first half. It will be premature to give the exact numbers. Certainly better than the first half, and because the lot of products that we have, the categories typically tend to pick up in the winter months. And FY26, our projection very clearly is that the growth rates in the edible oils of about between 4 and 5%, in foods business about 10%, and the HPC business about 15%. So net the company should see an uptick of close to anywhere between 7 to 8% in terms of the overall revenue, and earnings growth of close to about between 8 and 10% is what we anticipate.
Okay. All right, Mr. Asthana, we will leave it on that note for this morning. Thank you very much for joining in and giving us some perspective on the business. Quick.